Hello my friends, my name is Nick and I'm a financial analyst in Olymp. Welcome! Don't forget to subscribe so you won't miss anything. And also remember that we have our social networks. Markets are increasingly looking into the likelihood of further rate hikes and the phasing out of emergency stimulus measures. Meanwhile, there has been a significant inflow of funds into Bitcoin, which is updating its all-time highs. What happened over the past week and what to expect in the future? That's what we will discuss today. This week, currency pairs moved into different directions. Against the backdrop of fairly strong inflation statistics, the New Zealand dollar performed well. The data, which was published for the third quarter of this year, showed an increase in the consumer price index by 2.2% in quarterly terms and by 4.9% in annual terms. Recall that the inflation target for the RBNZ is 2%. Inflation in New Zealand, like the rest of the world now, is primarily supply inflation. The country imports a fairly large amount of oil. In 2020, crude oil imports exceeds 4% of total imports and battles over 11% of the total import structure. Against the background of the energy prices, considering that the price of Brent oil has increased by more than 22% over the past 2 months, and an increase in commodity prices, which leads to an increase in prices for battle components, it's not surprising that the consumer price index jumped so much. According to data from BBG, markets are setting a 90% probability for an interest rate hike in November of this year. Therefore, the growth of the New Zealand dollar is fully justified. The moment of truth is coming for the New Zealand dollar United States dollar currency pair, whether the bulls will be able to overcome the local maximum of 0.71710 or not. We believe that the monetary policy tightening by the RBNZ may actually play a negative role for the national currency. The American stock market continued to rise last week. The Dow Jones Index crossed the 35,500 mark. The NasDaq Index closed several gaps at once and continued to grow. The technical target for the index may become 15,600 points. The S&P 500 broke through 4,500 points and continued to rise. The growth of index exchanges continues against the backdrop of rising yields on US Treasuries, which means that the markets are already planning a rate hike in the near future, or at least a tougher rhetoric on abandoning QE. According to market sentiment, the markets are fully pricing in as many as 2 Fed rate hikes by the end of 2022. At the same time, according to BBG estimates, the markets are 50% confident that the Fed will raise the rate by 25 basis points as early as June of next year. Experts argue that the debt securities market cannot decline alone and that the stock markets may follow in the near future, which means that any growth now needs to be looked at critically. Traders should be prepared for a possible reversal. In the meantime, the strongest growth for the week was demonstrated by shares of NVidia, adding more than 5.5%. Alibaba grew by almost 6%. The company's growth is also due to the fact that Jack Ma left China on vacation to Majorca, thereby demonstrating to investors that the Chinese authorities were not going to persecute him, and this served as an impulse for growth. Facebook added 5%. Interesting news about the company is related to its rebranding, which should be announced on October 28th. Apple shares are currently in a bullish price channel. The lower border of the channel support level is located at around $140. The upper border of the channel, or resistance level, is located just above $160. According to technical analysis, in order for the growth to upper border of the channel to continue, the stock must overcome the significant mark of $150. According to the fundamental analysis, the situation looks somewhat different. According to the constructed model of discounting cash flows, DCF model, the fair valuation of the company is slightly more than $2 trillion, while the current capitalization is $2.5 trillion, meaning that the share price is clearly overpriced. Brent crude oil continues to grow, having updated a new maximum at $85 $5.52 per barrel, a bit short of the 7-year $86.70 highs. The current bullish trend continues with local support at $83.60. Last week, the asset corrected, but it's still too early to talk about a reversal of the global trend. The crisis in the energy sector is getting worse. In many areas, there is a shortage of supply along with an increase in demand. If we talk about oil, then its price is supported by excessively high prices on gas and coal, which contributes to an increase in demand for black gold. After Russia flexed its muscles, which ultimately led to the deal on the gas issue, the price of gas began to adjust. Natural gas struck a local ascending trend line that started in late August at a level of $5.450. Now this level acts as resistance. Local support is at $5.200. Nevertheless, it's too early to talk about a change in the trend. The price must fall below $4.500 and break through the long-term trend line. However, before that, the price should break through the strong support level at $4.800. Bitcoin renewed its all-time high near $67,000. The asset broke the previous April high, which was at $65,000. This level now acts as local support. Within a week, BTC rose in price by more than $10,000, and this is probably not the end. The predictions of some analysts that the price of the main cryptocurrency will reach $100,000 by the end of this year no longer looks so optimistic. Unlike most other trends, this one was caused by serious fundamental factors. What traders had been waiting for since 2017 has finally happened. On October 15th, the SEC approved the first US Bitcoin ETF on request of ProShares. The instrument received the ticker BITO and started trading on New York Stock Exchange on October 19th. By trading turnover on the very first day amounted to almost $1 billion. BITO became the first ETF in the world to overcome $1 billion in asset value in 2 days. Of course, updating the all-time high only increased the appetite of crypto traders. The Fear and Greed Index went into extreme greed state and reached 84 points. Retail traders were evenly divided on the short-term outlook for BTC, but bullish sentiment prevailed last week. So dear traders, this is all for today. Thank you very much for coming. Don't forget to subscribe so you won't miss anything. And bye-bye.